Good morning, Texoma, and thanks for joining us. I'm Ashley Fitzwater. Well, we are just a few days away from the first of the year, but of course, this is the time many start making those resolutions and getting ready. This morning, though, we're going to be talking about financial resolutions. So joining us, the expert of all things financial, Gary Silverman. He is the CFP Certified Financial Planner and also the founder of Personal Money Planning. So Gary, thank you for being here with us.
It is great to be here again, Ashley.
This is the time to really get it together, right? So what's our first tip?
Well, it's straightening out your budget. Your money comes in, money goes out. You want to make sure that more comes in than goes out. It's that simple. But it's one of those fundamental items. It's something we talked about last year. But the Dallas Cowboys, if you remember at the beginning of the season, we kind of went, yay, and then we kind of went, uh-oh. And they went back to fundamentals.
Yeah.
And any team has to go back to fundamentals. That's why they practice all the time. It's not like they don't know how to play football, just they forget some of the little nuances. And some of the little nuances occurs in your budget. You've just got to remember that you only have a certain amount to spend. If our country could remember that, that would be good. You know, you can control your own budget. You know you have a paycheck that comes in, or a retirement check, or pension check, or something that comes in. That's what you have. You don't have a dime more. You can fudge it a little bit, and I'm sure some people did during the holidays. They charge a little bit up on the credit cards, but they come due come January. And we don't want to have to pay them for the next 5 years for a present that was probably broken within 6 months of when you got it.
First thing we do then, what do? Pull out a piece of paper, do it on your laptop, your computer, your new iPad, whatever little electronic device you do your checkbook on, and pull it out and write down how much you have coming in each month, right?
Exactly. And I don't care whether you do it in Sanskrit or you do it on a computer. I mean, this phone here has more power than NASA had when we went to the moon. It's amazing what you can do nowadays. But you know, a lined piece of paper and a pencil works great too. The key is you've just got to understand where your cash is coming from. Look, and the coming in is easy, because beginning January 1st here, we're going to begin preparing our taxes that are due April 15th. And you know what? The IRS wants to know where all the money came in. And you're going to be able to tell them that on your tax form, so you already know that. That is already being reported to you in great detail. Now you got to figure out where it's going. And the stuff that comes off of your paycheck is really easy because it's printed on there. Your last paycheck of the year will tell you exactly how much that came out for health insurance, for whatever. But then there's other areas that you may have charged things on credit cards. Well, you need to capture that information. But you know, each month they send you a statement that tells where all your money went. You may be looking at your checking account. You know, that's a way that money went out. But you get, you know, your checks back, or at least online you can check them and see where your money went. The problem is this thing called the ATM machine.
Yeah.
The ATM machine is a wonderful device. I love them. I just used one this morning. The problem is that, you know, once it turns into cash, where did it go?
Yeah.
My suggestion is to just take that receipt. You get a little receipt that comes when you do the ATM machine. Keep it with the cash. When you spend cash, either collect the receipt that came from when you spent the cash, or just write down on the ATM receipt where it went. That's how you're going to capture some of the stuff that doesn't show up anywhere else.
Now, one thing though, I know we've heard people say this time and time again. I may even have been guilty of it myself. You're keeping all those receipts and you don't write them down, and then it gets overwhelming whenever you need to go write them down.
Right.
So how often should we be setting time aside to write stuff down? Is it a daily thing? Is it maybe once a week? You pick a day.
You can do it daily. I would do it no less than once a week, because if you go more than once a week, it's a chore.
Yeah.
It's an absolute chore. And some of the receipts are going to get a little hard for you to remember what I spent that for. You know, I went to this restaurant. Was that for business? Was that for pleasure? Was with grandma's birthday? What was this for? So you want to do it within the week. I like doing it preferably within the day that I actually spend the money. I come home, or in the case of business people, maybe when they go to work, they just take the few receipts they have, enter them in. It takes less than 5 minutes. It's not a chore now.
Yeah.
If you wait for the end of the week, it might take you 20, 25 minutes to get them all recorded, separated out the way you want them. If you wait to the end of the month, it may take you a couple hours.
Yeah.
And now you're not going to do it.
Right.
And so right now you have a great opportunity. Come January 1st, you can begin figuring out where every dime goes.
I like that.
And I'm literally talking every dime. When you drop a dime into a vending machine Although nowadays you got to feed dollars in the vending machine. But when you feed $1 in the vending machine, write that down. Oh, by the way, I bought that cola, and I bought the candy bar, and I bought the chips, which is all bad for you, by the way. But I bought all that, and that cost me maybe $2.35.
Right.
But $2.35 every single day ends up being just under $1,000 by the end of the year.
Yikes.
So it adds up.
Yeah, it really does. Well, it seems like easy steps to take, but it's a big start to making all these tips work together. Of course, budgeting. Like you said, a word we don't really like to talk about, but one that's so necessary. We have so much more to get to. The next step you take after you've got that first one down are still to come. So stick around. We'll be right back with more. Welcome back to Inside Texoma. Once again, we are talking about New Year's resolutions. We started with budgeting. Now we're going to move on to credit cards.
Credit cards, and that's really part of the budget, because normally what you want to do is you want to have your budget where you're saving up money so then you can spend it. Saving up money, then you can spend it, and you're tracking it through your budget. Well, a lot of us spend the money and then save it, and that's known as a credit card. We spend the money, then we save it by sending the credit card money each month. Well, there's a couple things to do here. The first thing is you always want to know what your credit looks like. You always want to be able to see your credit report. There's a wonderful site, absolutely free. It's www.annualcreditreport.com. www.annualcreditreport.com. That's how you check your credit report. What I like doing is there's actually 3 major reporting agencies. I never remember the names, but when you go on the site, you'll find out what they are. And I like doing one every 4 months, because you don't actually have to do all 3 of them at once. You can do one, wait 4 months, do another one, wait 4 months, do another one. You're going to find about the same information on all of them.
Okay.
Because all the credit card companies are going to report to all of them and such. But what you're checking is, are the cards that you're using showing up there? So you get credit for it, if you will. But also, make sure there's no cards that you're not using showing up there.
Yeah.
And that's where you might find fraud or identity theft or whatever occurring. So, and by that matter, they may have you listed as, oh, you're delinquent on this account. And you kind of go, well, that's not my account. I never had that account. Well, yes, you did. Well, no, I didn't. Well, how you even find out that information is being reported is to go to annualcreditreport.com, find out what's there. And that's why I like spreading them out, because sometimes things creep up.
Sure.
I don't want to have to wait 12 months before I find out that something was happening. Yeah, a lot of damage can occur.
And again, that's once a year that you can start over and check it again for free.
Every year you can check each card once. And so, yeah, 12 months after you check the first card, check that first card again, or check the first credit bureau again.
Okay.
Now, another thing is you want to get to the point where you're paying off your credit cards every single month.
So you're not having those outrageous charges, right?
Not having the charges.
Interest.
And what's nice is, because of the credit card reforms we've had the last few years, now if you have a balance, it shows you in a big box that says, if you pay the minimum on your card, this is going to take you like 47 years or whatever to pay off. And you're going to pay like, 18 times whatever you paid for the gift to pay off this card off. It kind of lets you know this is a problem.
Right.
If you're kind of going, no, this isn't a problem, now you know this is indeed a problem. You want to pay the cards off each month. Now, you may not be able to right now. You may have been building up credit card debt. You realize you have a problem. Your resolution is get out of it. So what you want to do is you want to pay off at least more than the minimum.
Okay.
Now, and what I'm saying here is pay off more than the minimum across all the cards. For simplicity's sake, let's say you have 3 cards. Each of them has a $100 minimum. I want to pay more than $300 across the cards. Now, let's say I have an extra $200. I find an extra $200 in my budget somewhere. I can put, in addition to the $300 minimum, $100 each card. Well, the logical thing is you pick the card that has the highest interest rate, start putting the extra money on that one, because that's going to save you the most across time.
Sure.
That's one strategy. Another strategy that works great is take a small one. Even if it's a lower interest rate card, but one that you can pay off, say, within the next few months by putting the extra money on it, because that gives you a sense of accomplishment.
Sure.
This one with a high interest rate might take you 4 years to pay off. and you're going to give up before you ever get there. This one, it may take you 3 to 6 months. You'll see that balance go down. And what's nice is once you get this card paid off, you can take that extra $200 plus the $100 minimum.
You were paying.
And now you got $300 you can dump on one of the other cards.
I like that.
So either way works for you. If you're more the mathematician engineer type, you'll go for the high interest rate one. That's going to bug you unless you pay it off. But you may have a card that's just bugging you. You just don't like that card being there, or it's a smaller one you can pay off pretty quick. That's another strategy. Either one works just fine. The key is to get them paid down.
Now, where are you getting this extra $200? If we're like so tight on our budgets right now, we don't know what to do. You know, I've heard a lot, maybe you have a garage sale, maybe you sell something, right? To come up with some money quickly, but you're saying this needs to be every month.
Yes, it needs to be an ongoing matter, and that's where the first section when we talked about budgeting is the key. When you get your budget done, and by budget I'm not looking at what you should be doing, it's what you're actually doing.
Sure.
And so you're seeing what the inflow is, what the outflow is, and whether or not you have more coming in or more going out. If you have more going out or just barely enough coming in to cover what's going out, now we got to work a little bit. We need to figure out what of the goings out we can change or what of the goings in we can change.
Sure.
Do we pick up some extra hours, an extra shift at the plant? Do we turn a hobby into a job? Do we go to work if we're a spouse who is not employed? Do we pick up some weekend work at a convenience store or something, or a department store? How can I increase the in, or how can I cut the out? One of the easiest things to do is if you got a spouse or a partner, just ask them, what here do you think I should cut? They'll point at exactly what you should cut. And it's nice if you can point out what they should cut on their budget as well. But the thing is, you're going to be surprised at something on your budget
that you can get rid of.
Yeah, you're going to say, that's just too much.
Right.
And that's where you start first. After that, then you're going to have to start cutting down on some things that you like.
Yeah.
And I'm sorry, but you know, God has given you a certain amount of income. You've built up a certain amount of expenses. You're going to have to get the expenses and the income. It's not fun. Well, you can make it a game and make it fun, but most people don't find it fun, and I understand it, and that's fine, but you still got to do it.
Right.
It's like brushing your teeth and flossing and stuff. Most people don't like doing it. Please do it.
Yes, please. And, you know, something, maybe it's not forever. Once you get out of this debt, maybe you'll have a little bit more money, too, at the end of the day. Paying off that car payment, you won't have it any longer. So, and we're going to talk about more ways you can save. Actually, a tip you gave us last year, I put it into work, so to speak, not all the way this year, but it helped out a lot. So I want to get to that, maybe a tip you can start this January as well, and see it work for you. So stick around, we'll be right back with more.